It's time for the good stuff. We are going to talk about smart money concepts. We are going to teach you some very profound, reliable strategies that you can use in your daily trading journey. Today we are going to talk about what are smart money concepts and why you should start using them. For English speakers, you can find my concepts in Beyond Trade. If you search that, you are going to find that in every social media platforms. And for Persian people, you can use Mehran Invest. Let's talk about the smart money concepts and what are those concepts. These concepts are from Wyckoff trading methodology, which himself was a dealer and a broker manager, and he watched the market coming in and out of the market closely, and beside that he studied the charts. He has a profound look into the markets. He has many concepts that you can use, but smart money concepts are the most important and the most powerful parts of those concepts. These concepts are an abbreviation of Wyckoff methodology, which has been updated over years and even in many cases got worse by gurus. But the most important thing is that these concepts are going to save your money and time a lot compared to other methods. And the reason is Wyckoff himself, which watched the real money comes to the markets, and he studied the charts. He even studied the news. For example, he found out when an asset is in good conditions and the market makers are going to push the prices higher. First, they tell their agents in medias that spread out bad news. For example, if the gold is in a reversal and it's making a bottom to go higher, they send out bad news like the gold broke its all-time low, the gold is in 10 years lows, which we can see on charts. But those agents are going to spread FOMOs to the traders so they can sell their goods. Why? Because those big institutions, those big monies and market makers want somebody's gold to buy from them. They want somebody to sell their golds to them so they can fill their orders. So these concepts are very profound and reliable because it's not statistical like some rectangles which you learn in kindergartens. It's not some hallucinations from some gurus which they don't trade themselves, but it's the real interaction between the money, the time, and the price. Let's dive into smart money concepts. First, let's change your paradigm. The marketplace is not for easy money. It's very harsh and wild, and there are just some beasts left. You should become a beast or become a prey. You don't have anything between. And what do beasts do? They lure their prey into their hunting ground. And that's exactly what technical analysis and price action analysis is made for. Those methods are lures. They are made for making you a prey. And you are hearing this from a person that has two profitable signal channels, one in crypto, one in forex. You are hearing this from a person that has some MQL5 live links from a brokerage account. You are hearing this from me, which posted 60, 90 days webinar live trading days, which are consecutive days, and they are profitable as well. So it comes out from a person that has its skin in the game and has its 10-year experience playing with these methods and has a very profitable journey. Don't stuck with technical analysis and price actions. And to be honest, if somebody asks me about how they should start their trading journey, I'm gonna talk about smart money's lead courses, ICT courses. And even if they say that, for example, I don't like ICT, I'm telling them to go and test some expert advisors or indicator trading. They are very easier and faster way to profitability compared to something like price action analysis. And are you that naive to think that you can make profits in these enormous markets using rectangles and lines that you can see them being taught to 3 to 4 years old children in kindergartens? These things are being taught to monkeys, and you want to make profits with them. For example, let's see a chart. Let's see this chart. We have a very obvious good double top here. Let me highlight that for you. You can see that here. We have a double top here. It's here. And it is a breakout here, so you can enter the market and put your stop loss here, or somebody will put their stop loss says here. Let's see what happens. It's the same chart. You can see that we have another double bottom here. We have a form of support and resistance here that can be a breakout. You can see a channel forming here, another pattern in the same place. You can see a very good breakout here. So all of these people think that they have something special, they have some voodoo magic that can make them rich in the markets. But let's see what happens. All of these points are liquidities. We have a double top here. The only two places that you can enter the trade is below this low. You can see the result here. Below this low on this imbalance, you can see the result here. And above these liquidities. So let me show you what we have here as liquidities. You can see that we have a very good double top here, and it is a stop loss. You can see that we have a double bottom here. It is a stop loss here. You can see that, let me erase some of them. You can see that we have some kind of breakout here. We have a reverse head and shoulders right here, which is a QM by the way. We have another big double bottom here, another small double bottom here. We have a breakout here, and all of these people think that they solved the mystery of the market. But you can see that we have just two good trades, one so-so trade and two very good trades. This is the trade that we could take here. This is the trade that is the best trade that we can take here after this imbalance, and this is a very good trade as well. But you don't find any book that teaches you these concepts. Why? Because the books are sponsored by big money. They are sponsored by, especially the old books that are the start of technical analysis and are the start of, for example, price action. For example, one of them is Dow Jones. You think the Dow Jones is it's the heaven of market makers. I don't care about this himself. I care about the signal they are sending out. So don't stuck in those concepts. I'm not saying that those concepts don't work. I'm just introducing you a better, easier, and faster way to profitability. You have some energy, and when that energy hits the bottom level, hit the zero level, you are going to leave the markets. I have many students, and I witness their energy draws out with these concepts, with jumping from one method to another method. So stick to a method that saves you a lot of money and time and energy, because we want to keep you in this game so you can make money after 1 or 2 years. When this time becomes 10 years, 5 years, you are going to hit the bottom line and leave the market soon. But who persists and who stays in the market is going to make a lot of money. I'm a very honest person, so can we really know what the market is doing or what market makers are doing? It's yes and no at the same time. We don't really know what they are actually doing now, and nobody knows, because it's not one institution, it's not one person, for like for example Warren Buffett or George Soros. It's like an entity that has many cells, and every single cell is every single person or every single institution. They overall make the markets and make these movements. For example, when you study big money's portfolios, you can see that they have a broad range of assets in their portfolio, and they are hedging those positions. They are making some of them liquid. For example, they are sitting on a lot of money. Why they do that? If they can anticipate the markets and they can participate in big moves for 100% of the time, why they just don't stick to, for example, 20 good stocks? Because they don't know really what future is going to be looking like. They really don't know how the markets are going to move. Is it going to the upside? Is it going to the downside? Nobody knows. They just have a system that in the long run make a lot of profits for them. And we are the same. Think that those institutions and those big monies are whales. We can't be a whale. You can't be a whale with $1,000 in your bank account. You can't be a whale with $2 million in a bank account. If you have $1 trillion in your bank account, you are a whale. We are those little fishes that go and grab a very small piece of that big shark's prey. We are those little small fishes. So we can't be that whale. We can't change the market direction. We can't even make a small 1-minute candle. But those whales are very big, those sharks are very big, that we can see the signs of those big entities. We can see the waves that they make in the ocean. And we start to move in their shadows. So we want to see, because they are very big, and when they move they have a lot of footsteps and a lot of signs, and we are going to learn those signs and start to move in their shadows and make money with them. And I'm here to help you to do that in the long run. We are going to have a very fun and very rewarding journey together. You can see my analysis, you can see some of my live trades in my YouTube channel. I'm very honest, and I I love to help you. I love the social media itself, and that's why I create contents for you, and we are going to have a hell of a fun with each other. Thank you. Your subscription, likes, and comments are going to help me a lot, and goodbye.